Welcome back to my channel, NDS Shorthand. Please like, share, and don't forget to subscribe the channel. 5 seconds to go. Start. In Civil Appeal number 1546 of 1974, the following items were involved: capital reserve, stock and stores reserve, bad and doubtful debt reserves, obsolescence reserve, loans and insurance reserve, investment reserve, and forfeited money reserve. The question was whether these were to be included in the computation of capital according to the provisions in the second schedule to the Super Profits Tax Act 1963. Under Section 4 of the Super Profits Tax Act 1963, every company shall be charged for every assessment year commencing from 1st April 1963 a tax as super profits tax in respect of so much of its chargeable profits of the previous year as accessed the standard deductions at the rate of or rates specified in the third schedule. Standard deduction had been defined in clause 9 of the section 2 as follows: an amount equal to 6% of the capital of the company as computed in accordance with the provisions of the second schedule, or an amount of rupees 50,000 whichever is greater. The second schedule contained rules for computation of capital of a company for the purpose of the said act. None of the reserves claimed by the SSC had been allowed as deductions in the computation of its profits under the relevant Income Tax Act. The question was whether these represented reserves. The tribunal has referred to this court the following question: whether on the facts and in the circumstances of the case the tribunal was right in holding that capital reserve, stocks and stores reserve, bad and doubtful debts reserve, obsolescence reserves, loans and insurance reserves, investment reserve, and forfeited monies reserve were to be included in the computation of capital according to the provisions in the second schedule of the Super Profits Tax Act 1963. We must observe that so far as the capital reserves are concerned, in view of the findings recorded by the High Court that the amount represented reserve and it was not earmarked for any existing liability for being utilized by the company, it must be held to be reserve. The capital reserve, which was a sum of rupees 11,73,952, consisted of two amounts, namely 12,212 and rupees 11,61,770. The amount of rupees 12,212 represented an insurance claim received by the SSC company on account of a fire which had destroyed some assets of the SSC company. The said receipt of fire insurance claim has directly been credited to the capital account and the sum of rupees 11,61,770 was credited by transfer from the profit and loss account in earlier year. This was not provided for against any existing or future liability. It was rightly treated as capital reserve.